What's up guys, it's Amos. Listen, if you can understand what one candlestick is really telling you, you can start reading the market like a book. We're gonna talk about bullish versus bearish candles, what's the difference between open high-low close and open low-high close, and how do they form on the lower time frames so you can start taking setups before they even finish printing. No fluff, straight cash, let's go. Alright, let's start from the top. Every single candlestick, whether it's on the 1 minute, the 1 hour, or the daily chart, shows us four simple things. Where price opened, the highest point it reached, the lowest point it dropped, and where it closed. We call that the open, high, low, and close, or OHLC. If the candle closes higher than it opened, it's bullish. But if it closes lower, it's bearish. It is that simple. Do not overcomplicate stuff. But that's just the surface. What we really care about is how price moved during that candle. You have to think of each candle like a story, where it started, where it went, who was in control, and who won the battle. Let's say we're looking at a clean 1 hour bullish candle. To most people, that's just a blue box, but to me, I see a fight that happened inside of it. Let me break it down. If this candle is a 1 hour candle, I can tell you exactly what's happening on the 1 minute chart. Every single candle has a open, high, low, and close, which means that on the 1 minute chart, we usually see accumulation at the open. Then we create the down wick of that H1 candle first. Then we shift above the opening price, creating a market structure shift. We hold the market structure shift and we start displacing to the upside, creating the high of that candle, and then we finish by seeing a small pullback to create the up wick of that bullish candle, and then we close by accumulating again. Let's do the bearish scenario. We see accumulation right here at the open, then we create the up wick of the candle first. We then hold, create a bearish market structure shift, and pull back to that bearish market structure shift. The sellers hold again, we create lower lows, higher lows, then we create the low of that candle. We see a small pullback to create the down wick of that bearish candle, and then we close. You can see that there is two stages of accumulation, one at the open, one at the close. Same thing for the bearish scenario, one at the open, one at the close. But this is not the most important aspect of understanding a candlestick. The most important aspect is understanding time. On a bullish candle, you should create the low of the candle first, then distribute during the whole hour, then close. Same thing on the bearish scenario, you should create the high first. So the up wick first, then you would see the distribution and the close last. If you understand how a candlestick moves, you can anticipate exactly where price is going to reverse and where price is most likely going to hold bullish market structure shifts or bearish market structure shifts. We just saw what was a clean distribution candle. Now let me talk about reversal candles. I think this is where most traders get it messed up because they can't understand the difference between wicks and bodies. The body of a candle shows the real ground taken and who's actually in control. The wick, though, shows where price tried to go but couldn't hold. A bearish reversal means that it's a candle with a bigger upper wick. So price shuts up first but then fell hard, which means that the buyers lost the fight and the sellers are the one controlling the market. Same thing on the bullish reversal. It means that there is a bigger lower wick than the up wick and the sellers try to push price down, but the buyers stepped in hard, brought it all the way back above the opening price, and then the candle closed. Again, every single candle has an open, high, low, and close, which means that if this candle is a 1 hour candle, I can tell you exactly what is happening on the 1 minute chart. Every single 1 hour candle opens up by accumulating first. Then on a reversal candle, we see a huge move to the downside, creating the lower portion of that candle. But then we start seeing buyers stepping in, trading above the opening price, holding the market structure shift, we create the high, and then we close by seeing accumulation again. The difference between a clear distribution and a reversal candle is the size of the wick and how many buyers or sellers got squeezed during that fight right here when we created that lower portion of that candle. Now let's use the bearish scenario. We open up by seeing accumulation first. We see a huge up move to create a big up wick. Then we start distributing down below the open, creating a bearish market structure shift. Then we're seeing lower lows, higher lows. we create the low of that candle, and then we pull up to see accumulation again. The only difference again is the fact that the wick is way bigger, plus what is going to happen after is most likely a reversal. All right, let's make this real. Check this out. We're on the 1 hour chart, and this candle right here is the perfect example of what a bullish reversal candle actually is. So we start up right here at 9 a.m. and look at what this candle is gonna do. We go down, we start accumulating first, and then we sweep those lows. Then we start seeing price moving to the upside, creating a bullish market structure shift. So at this point, we created a open low first, and then we saw a market structure shift. So we can see that we're trading above the opening price, and this wick right here is ginormous. So we're expecting a reversal. And then if this breaker right here holds, we're gonna see the bullish reversal being confirmed. And then it holds and it starts pushing up, and we're closing as a reversal right here, as you guys can see. This is how we closed. So in this candle, you guys can see exactly what I was talking about on the video. We open up by seeing accumulation, we create the down wick of that candle, then we flip above the opening price, we hold, and then we keep distributing to the upside. What is the most important aspect of understanding what is a candlestick? It's understanding that the low of that candle is going to be formed first before closing. Let me show you what a real bearish distribution actually looks like. Right now I'm on the 1 minute chart on NQ, and this candle is an indicator showing what the 1 hour candle actually looks like. On the higher time frame, after making my analysis, I think that the next candle is most likely going to be bearish. So now that I understand the mechanism behind how a H1 candle actually works, I want to see price accumulating first, then creating the high of that H1 candle, okay, by sweeping buy side liquidity. After seeing that, I want to see price market structure shifting below the opening price, and then hold to create new lows, lower lows, and higher lows. As soon as I have that confirmation of that high being created, this is where I can start anticipating that price is going to go bearish for that whole hour. Now, let me show you exactly what's happening inside that bearish distribution. This is the open of the new H1 candle. I expect a bearish distribution. So here is the accumulation phase. We accumulate first, and then let's see what it does. We sweep a high. Okay, we go up first. So this up move right here is most likely just a manipulation to create the up wick of a bearish H1 candle. Now, what do you want to see next? You want to see price closing below this low, which would be a market structure shift. This is exactly where you get it. So you created the high of a bearish H1 candle first. So now you do expect that this candle is going to close bearish. So now let's see if this market structure shift holds right here, and it starts accumulating again, and then boom, you see the distribution to the downside. This is at 51, so we should see accumulation again at the close of that candle. And right here, this is exactly where we close. So we had exactly a perfect distribution. We opened creating an accumulation phase. We went higher to create the up wick of that bearish H1 candle. Market structure shifted below the open. We held, and then we created the low of that candle, and we accumulated again. Okay, so this is exactly what you want to see when you're looking at an H1 bearish distribution. Now let me show you what a real bearish reversal actually looks like. I'm on the 1 minute chart, and this indicator is on the 1 hour. So right here we open. If we expect a bearish candle to be formed on the higher time frame, we want to see the up wick of that candle being formed first, and then seeing that bearish market structure shift. This is all about timing. Now you can see we started by seeing accumulation first, and then we're seeing an up move. So if we can dig below that opening at one point during that hour, I know that we most likely just formed the up wick of a bearish candle. Let me see what's happening right here. So we go up first right here. So this candle is currently bullish. If we can flip below the open, this is where I will see that the bears are the one controlling the market and that the buyers are being squeezed. So right now, as soon as I see this bearish market structure shift, this is where you know we're going to see a bearish distribution, and this is exactly what we see in this case. So here's the bottom line. Every candle tells a story. If the body is big, it means that some participants are dominating the market. If the wick is big, it means that there's rejection and some people are being squeezed. Reversals and distribution don't happen randomly. Okay, you need context. You need to be able to understand which candle is most likely going to print. You need to zoom in to see how the candle form, not just how they look. So remember that you don't need to trade every single candle. You just need to be able to predict one candle, and it's all that matters. If this made candles finally click for you, like actually made sense, drop a like, subscribe, and let me know in the comments what you want me to cover next. Use code AMAS for the highest discounts on Tradeify because my code gives you a higher win rate. See you guys later. Peace out.